Hello and welcome to AI Market News by LM. All right, let's jump right in because there's one story that is absolutely dominating the conversation in global markets right now. So what's that big theme? Well, it's this incredibly strong belief, this conviction, really, that the US Federal Reserve is going to cut interest rates next week. I mean, what was just a debate a little while ago, now it's being treated like it's a done deal. And what's driving this? Well, it's kind of funny, actually. It's signs of a cooling economy. Yeah, we're in one of those classic bad news is good news situations. Investors are actually cheering on signs of a slowdown because they think it'll force the Fed to step in and give the economy a little boost. All right, so let's dig into the actual evidence. What's the data that has everyone so certain about this? The big one, the real catalyst, was this super soft ADP payroll report. It showed a drop of 15,000 jobs in the private sector. That's the first drop we've seen since 2023. And for the markets, this was it. The clearest signal yet that the US labor market, which has been running red hot, is finally starting to cool off. And just like that, this one piece of data completely flipped the script. As we're seeing in news commentary, it basically wiped out any doubt that was left about a rate cut. So now, the conversation isn't if the Fed will cut, it's about how big the cut will be. We're even seeing some traders betting on a more aggressive 50 basis point move. We're talking a 0.5% cut. Okay, so when expectations shift this dramatically, you know there are going to be some major ripple effects. Let's look at how assets are reacting. The very first place we saw the impact? Currencies. The idea of lower interest rates here in the US just sent the dollar tumbling. It actually had its worst day in months. Now, inside the stock market, something really interesting happened. We saw this big rotation. You know the huge Magnificent 7 tech stocks that have been leading everything? Well, they kind of took a back seat. Instead, we saw money pouring into small cap stocks, the materials sector, and commodities. And a lot of analysts are saying this is a really healthy sign. It means the rally is broadening out. It's not just about a handful of giant companies anymore. And you can really see the dominoes falling here. The S&P 500 pushed higher, while the dollar took that nosedive. And a weaker dollar, well, that gives a huge boost to other things, like the euro and especially commodities. We saw copper, for instance, pushing up to fresh record highs. So let's pull back a bit and look at the bigger global picture now, because this is causing some real cross currents, especially over in Asia. Yeah, this isn't just a US story. A weak dollar creates some serious headaches for central banks all over the world. And right now, there is no better example of that than in China. So as the dollar fell, what happened? China's currency, the yuan, started surging. It was pushing right up against its highs for the year, and that's when the People's Bank of China stepped in. They set their daily reference rate, what's called the fixing, way weaker than anyone expected. It's being called their most forceful signal since 2022. And the message seems pretty clear. Hey, we're okay with the yuan getting stronger, but we want it to be a slow, orderly process, not a crazy surge that could mess with our exports. And you've got to remember, all of this financial chess playing is happening with a pretty complex geopolitical background. At the same time, French President Macron is in Beijing for some really high-stakes talks about trade and Taiwan. So yeah, that just adds a whole other layer of what if to the global picture. Okay, so the stage is definitely set for a huge week ahead. What are the key things we need to have on our radar? All right, looking at the economic schedule from investing.com, the main event, no surprise, is the Fed's meeting next week. That's the big one. But we're also going to be watching for new inflation data and more labor reports, right? To see if this whole cooling story holds up. And of course, you can never count out geopolitics as a potential market mover. And that really leaves us with the million-dollar question, doesn't it? The market has basically priced in this perfect landing. An economy that cools down just enough for the Fed to cut rates, but not so much that we fall into a recession. It's the Goldilocks scenario. The huge question now is, will the Fed actually deliver what everyone seems to be expecting? Now for the disclaimer. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.